Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, September 4th, 2007, and the market's closed. S&P 500 finished with a gain of $1.63. That's 1.1%. And in doing so, it definitively took out this neckline and the little resistance area we had seen from that lower high right here at 148.33. So now this market has turned into a market that's making a higher high and this higher low here. So it looks like the buyers are regaining control of this market. The market also closed above that 50-day moving average. The 50-day moving average right now is at 148.77. Here we are about 50 cents above it, so we've got a little bit of daylight between the breakout and the moving average, and that gives us in a good position where the market, since it is a little bit extended here given the recent rally over the last 4 days, that we can still maybe see some strength for a day, day and a half, and do some consolidating above this area, this prior neckline. That is hopefully, maybe down near 148 or so. We could get a pullback to over the next few days. Again, go back to my blog from last week and take a look at the way these inverted head and shoulders patterns from 2005 and 2006 unfolded, because it looks like they're doing the same type of thing. And you notice, I think in 2005, it just took off. In 2006, it spent some more time near that 50-day moving average, if I remember correctly. But either way, we've got to break above that level. Clearly, we had a strong momentum move today as short sellers have been trapped. People who are listening to the news and worried about subprime and all that stuff, that's interesting backdrop, but again, the only thing that pays us is price. The market had turned back above this rising 5-day moving average and remains above that level. Now we got to look at, the real breakout point was about 148 or so, so now hopefully that holds as support. We do have a rising 5-day moving average, so in the intermediate term, the benefit of the doubt continues to go to the buyers. You've still, it's never time to breathe easy in the market. I always say go cautious, be slow, and I'd say that because that's the way of a professional trader, is to always be looking over your shoulder. There's times to definitely press it and go a little bit more aggressive, but it doesn't mean forget about the downside and forget about the chance that there might be some kind of pullback. They could take you out of the game, and you have to protect your profits just as much as you would protect your individual your starting equity. Don't get locked into the belief that it's just house money or whatever. Once it shows up in your account, it's your money as well. So continue to focus on 148 as potential support. The upside target, conservatively measured on this inverted head and shoulders pattern from the daily time frame, was again from about 140 straight up to the neckline at 149, 150. Let's just call it 9 points. Add that to the breakout point at about 148. That gives you a price target up near 157. So that would be new highs for the S&P 500 if that were to happen. A lot of people don't want to believe it. That's why, again, I think that it's still a good possibility. The semiconductors did break past their neckline of the inverted head and shoulders pattern last week, and I had said the conservatively measured target there was 39.50. You can see that today we got pretty close to that, actually. We're up here about 39.10 or so. This market is clearly getting extended. We've got this higher low way down here at about 36.20. I wouldn't be surprised to see the market start to pull back and maybe see if that 50-day moving average can hold a support over the next couple days or so. So continue to keep an eye on that. But the benefit of the doubt does go to the buyers. We've got a rising 5-day moving average. It's just getting a little extended. And you can see that late in the day, we did see a little bit of a sell-off here. And the sell-off was accompanied by some heavier volume. So that's just a reason to think that maybe we're going to get a little bit more consolidation. The IWM, once again, this Russell 2000 came right back up to that 80.10, 80.20 level and actually pierced through it intraday. You can see the high was $80.32. But that wasn't good enough to qualify as a break past that level. I always want to see, it's not just the break of the level, but the subsequent action. The S&P 500 broke on Friday, but was unable to hold. Today it was able to hold above its resistance level. But this, we've still got the declining 50-day moving average and the 200-day moving average in this area as well. So that's reason to think that there's that we've still got to be cautious in here. One interesting thing I want to point out, sometimes you read about what people call the death cross. They call that when the 50-day moving average crosses through the 200-day moving average. Pay no attention to that. Moving average crossovers represent indecision. Let me give you a real good example because I pointed it out 2 weeks ago when it happened in Goldman Sachs. Goldman Sachs, you got a death cross on this day right here. Look at what day that was. That was the exact low. That's when the 50-day moving average pierced that 200-day moving average for the first time in, well, it looks like maybe since it's become public. The so-called death cross did not hold in Goldman Sachs, and I don't think it will either in this IWM. It's just too late of a signal. Continue to focus on the fact that the market keeps hammering away at this resistance level. The seller's resolve weakens each time it gets up there, and there's potential that it could break out. But again, we've got a declining 50-day moving average. Let's let the market prove to us whether it can or cannot. I think the better support is down near about 79.25 right now. So maybe another pullback and then that push past the resistance in here. That would actually be the ideal way that I'd like to see the market unfold. And the NASDAQ 100, which last week we had seen broke past its neckline of the inverted head and shoulders pattern last Wednesday, has continued to outperform on the upside. This market was up 1.7% today versus 1.1% on the S&P 500, and the market is getting pretty extended in here. I think you're starting to feel a lot of short pain in this market. The shorts who were too stubborn to look at price and instead were focused on the headlines and the news and that sort of thing, is stuck around too long in their short positions. And the market is, survivability means being able to be flexible in the market and change as market action dictates, not as you want things to unfold. What I'd like to see the market pull back down towards this 50-day moving average. Let's see if it happens. Right now in the 10-minute time frame, buyers are still very firmly in control here. There's nothing that says we're going to get a pullback down towards that level, but very similar to the semiconductors, you can see late in the day here, look at where all that volume came in. Let's take a look at where the VWAP was. And the VWAP for today was 49.60, so it came down right to the VWAP. So no real damage done to the buyer's psychology today, but it is extended here from 46.75 up to 50. Nice round number two. Seems like an area where we might encounter a little bit of selling. Hope you had a good day today. There were a lot of really good stocks on the upside, and just don't confuse a bull market or bullish action with something special that you're doing. Don't be seduced by the easy profits. Maintain your discipline first.